Hello ladies and gentlemen, I'm Joseph Novichuk, Senior Trading Manager with GDM. Today's outlook, we start with the most important, and that is the dollar. It came off a near 1 week high versus a basket of major currencies on Wednesday. But its losses were limited as the market continued down the hours to a likely hike in US interest rates. The Federal Reserve is widely expected to deliver its first rate increase in nearly a decade later due today. But of course, after more than a year of anticipation, investors are more eager to know how quickly the central bank will tighten following the initial rate hike adjustment. The dollar eased 0.1% versus a basket of major currencies to 98.075. On Wednesday, the dollar index rose about 0.6% and of course touched the peak of 98.292 against the high level of December 9. Asian markets, however, climbed on Wednesday, taking cues from a stronger finish on Wall Street. The rally in US and Europe overnight indicated markets are fully pricing in the expected Federal Reserve interest rate hike. However, the Fed's decision is due on Wednesday, and we're about to find out what would be the market conditions from now on. The Nikkei 225 index was back in positive territory, closing up for 84 points or 2.61% at 19,050, with financial sectors seeing the biggest gains. The index shed 1.68% in Tuesday's session. Against the yen, however, the greenback inched slightly higher 0.1% to 121.71 yen. And of course, the European markets also opened higher but soon reversed gains on Wednesday ahead of a widely expected interest rate rise by the Federal Reserve in the United States. The Pan-European Stock 600 index opened over 0.2% higher but turned negative shortly after. European markets followed the positive lead set in Asia, where of course markets traded slightly higher on Wednesday, taking clues from a stronger finish on Wall Street overnight. The euro, on the other hand, edged slightly higher 0.1% to 1.0941. On Tuesday, however, the euro slipped around 0.6%, retreating from a 6-week high of 1.1060. Gold in the commodity sector ticked higher on Wednesday as investors awaited the conclusion of a Federal Reserve policy meeting at which US Central Bank is expected to hike rates. That is for the first time in nearly a decade. The Fed began a 2-day meeting on Tuesday, which is widely expected as to finish with a rise the central bank's target rate by 25 basis points, ending 8 years of loose monetary policy. Higher rates, however, would then demand for non-interest-paying assets like gold, while of course boosting the dollar. The Fed's decision will be released around 19 in the afternoon on Wednesday, that is GMT time. Gold rose 0.5% to 1065.60 an ounce in late Asian trade after closing lower in the last 2 sessions. Gold, of course, may drop in initial reaction to the hike, but as the hike is generally expected, any sell-off may be relatively short-lived. However, a hawkish tone along with the hike could trigger a strong rally in the dollar that could make it tough for the gold to recover. Also, in the energy sector, global crude oil prices at 7-year lows, which will not continue and could swing upwards in the late year. Of course, OPEC Secretary said on Tuesday as the low prices cycle lead to cuts in output from some producers, oil prices have fallen by about 2/3 since mid-2014, with of course crude on Monday flirting with its lowest level since 2004 at just about $36 a barrel. In today's calendar, in about an hour time from now, we're expecting for the Eurozone CPI index and trade balance, and of course the Federal Reserve monetary policy statement with the interest rate decision at 19:30 and 19 half an hour earlier for the interest rate decision respectively. That's all for today. Keep an eye on the calendar, and most of all, stay rational. Thank you very much for joining us. I'll see you next time. Bye-bye.